Ladies and gentlemen, good day and welcome to the Sharda Cropchem Limited Q1 FY26 earnings conference call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference has been recorded. I now hand the conference over to Mr. Manish Mahawar. Thank you, and over to you, sir.
Yeah, thank you, Anushka. On behalf of Antique Stock Broking, warm welcome to all the participants on the 1Q FY26 earnings call of Sharda Cropchem. We have Mr. R.V. Bubna, Chairman and Managing Director, Mr. Sailesh Mahandale, CFO, and Mr. Jetkin Gutka, Company Secretary from the management. Without any delay, I would like to hand over the call to Mr. Bubna for opening remarks, post which we will open the floor for Q&A. Thank you, and over to Mr. Bubna.
Thank you, Manishji. Ladies and gentlemen, my name is Ram Prakash Bubna. Good evening and very warm welcome to everyone present on the call. Along with me, I have Mr. Sailesh Mahandale, our CFO, Mr. Jetkin Gutka, Company Secretary, and SGA, our Investor Relations Advisors. Hope you all have received our investor deck by now. As you are aware, we are engaged in marketing and distribution of wide range of agrochemical products, and that is herbicides, insecticides, fungicides, biocides, etc., catering to diverse global customer base. We prepare comprehensive dossiers and seek registrations in our own name. We allocate substantial resources for securing registrations of our products and thus establish our foothold in the market. Our total product registration stood at 2,981 as on 30th of June 2025. Additionally, 1,021 applications for product registrations are at the approval stage. Coming to industry dynamics, the global agrochemical market is showing signs of recovery driven by revival of demand, complemented by gradual recovery in prices. Inventories have come to normal levels across distribution channels. In Q1 FY26, our total revenue have grown by 25% to rupees 985 crores with overall volume growth of 13%. This performance is attributable to global revival in demand and recovery in pricing. Europe remains major contributor to the overall growth. Volume from agrochemical segment grew by 11% and non-agricultural segment grew by 59% on year-to-year basis. With input costs stabilizing, our gross margins have expanded by 630 basis points to 35.5%. We expect gross margins to be in the similar range in the financial year 2026. EBITDA for the quarter stood at rupees 142 crores, which is a growth of 67% on year-to-year basis. PAT for the quarter has stood at 143 crores, showcasing a growth of 424% on year-to-year basis. Working capital days stood at 100 days as on 30th of June 2025, showing an improvement by 18 days as compared to March 2025. Capex for the quarter stood at rupees 114 crores. Cash and bank and liquid investments stood at rupees 791 crores as on 30th of June 2025. As we step into 2026, we aim to increase the product registrations with a planned capex of rupees 400 to 450 crores, backed by strong pipeline that reflects our resilience and growth focus. We maintain our stance for FY26 revenue to grow by 15% with a healthy EBITDA margins in the range of 15 to 18%. With this brief overview, I would now like to hand over the call to our CFO, Mr. Shailesh Mahendale, for discussing our financial performance during this period. Thank you so much. Over to Mr. Shailesh Mahendale.
Yeah, thank you, sir. Good evening, everyone. Coming to the quarter 1 financial year 26 performance, revenue stood at 985 crores in Q1 FY26 versus 785 crores in Q1 FY25 with an increase of 25% year on year. Coming to the split, agrochemical business increased by 25% year on year to rupees 846 crores, whereas the non-agrochemical business increased by 31% year on year to rupees 139 crores. Gross margin stood at 35.5% in Q1 FY26 as against 29.2% in Q1 FY25. EBITDA grew by 67%, which stood at 142 crores with EBITDA margin at 14.4%. PAT stood at rupees 143 crores versus 27 crores during last year, showing 424% growth on year basis. Working capital days stood at 100 days as on 30th June 25 with an improvement by 18 days as compared to 31st March 25. We remain debt-free company and have cash bank liquid investment of rupees 791 crores as of 30th June 25. We can now open the floor for the question answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bhavya Gandhi from Dalal & Broacha Stock Broking Private Limited. Please proceed.
Yeah, hi. Thanks for the opportunity. So is it possible to share the gross margin geography-wise, region-wise gross margins for each region?
1 minute. Just give me a second, please.
Yeah.
Yeah, the gross margin was Europe region was 43%, NAFTA region was over 26%, LATAM 28%, and rest of the world 26.5%. Total 35.5%.
Got it, sir. Sir, and what has led to this substantial growth in the European region where our revenues have grown 43% YOY? If you can throw some light on that.
So growth on the agrochemical sector and good demand and good weather conditions to promote the agricultural business, which is supported by agrochemicals.
Okay, and sir, on the revenue front, is it possible to break down in terms of product mix, forex, and volume value growth? What is the broad bifurcation, if you can provide?
Volume value, yes. Let me see. Now volume in European region, it was 6,565,000. NAFTA 3,870,000, LATAM 805,000, rest of the world 417,000. Total 11,657,000. And
Got it, sir.
year to year about 13.2% growth.
Right. And sir, can you just throw some light on the forex gain that has been substantial for this quarter, almost 70 crores plus? So if you can just throw, is it because of the euro appreciation, and how do we see this going forward?
See, it is mainly dependent upon the cross-currency exchange rates. Our business model is that we source from China and all the sourcing is done in US dollars. And about 45% of our sales is in European region, which is in euro currency, or some of the countries' local currencies like Polish zloty or Czech kroner and other things. So whenever the euro-dollar exchange currency improves, then we stand benefited and profited. Last year, or about 6 months back, the euro-dollar exchange rate was 1.04, 1.03 dollars to a euro. Currently, the same exchange rate is 1.17 dollars to a euro. So this is more than 12% increase in the exchange rate, which is a straight benefit to Sharda's business.
Fair enough, sir. Thank you so much. That's all from my end.
Thank you. The next question is from the line of Rudraksh Raheja from iThought Financial Consulting. Please proceed.
Thank you for the opportunity, sir. My first question is, could you elaborate more on this Q1 growth, 25% sales growth? And was there any upfronting of sales in anticipation of tariff hikes? And can we assume this kind of growth to be sustainable?
Sir, your second part of the question was not very audible. The words got mixed up. Can you please repeat this question once again?
Yeah. So this 25% sales growth in quarter one, was there any upfronting of sales in anticipation of tariff?
Was there any what? What was the word?
Upfronting of sales.
Upfronting, what does that mean?
That the customers were assuming that tariffs may hike, so they pre-ordered a lot of materials.
No, it was very normal. The customers were buying their normal requirement. In some cases, of course, the tariff matter which is being discussed by the current US President, this has been exciting and also depressing some people, but that is not very much, Our customers have bought their normal requirements and not very excited to buy more.
So, sir, we should assume that this can sustain over the coming
Yes,
quarters.
please. Yes, please.
Good to know that, sir. Second question is regarding the gross margin expansion, which is the highest in the last few years. So can we assume this number to be sustainable as well?
More or less, yes.
And sir, did it have any inventory gains or something like that? And if yes, how much?
No, there's not been any substantial or remarkable inventory gain at all.
Understood, sir. Tariffs for China are already declared. And sir, what's the impact on our business that we expect going forward?
Very little. Because today China is considered to be a factory to the world. So even US does not have much of an alternative sources to source from. And we are able to pass on all the tariff increase to the customers in US, and they gracefully accept it, knowing what is the situation.
Yes. Thank you, sir. If I can squeeze in one last question. How do you
Sorry to
see the
interrupt,
pricing
Mr.
situation?
Rudraksh. So could you please go back in the queue as there are several participants waiting for their turn?
Yeah, sure. Thank you.
Thank you. The next question is from the line of Viraj from SIMPL. Please proceed.
Yeah, hi. Thanks for the question. Just two questions. One is on the non-AgChem business. If you see for last 3 quarters, our volume growth is much higher than value growth. So there's a negative realization which is playing out for last 3 quarters in a row. And last 2 quarters, the realization drop is even sharper. So just trying to understand, what is causing this sharp drop in realization, especially, in Q1, you would have a higher tariff on imports from China. So one would think the realization growth would be there to some extent. But even in Q1, we have seen a negative realization. So what is driving the negative realization and what is driving the higher volume growth?
Have we noticed any negative realization? Mr. Dheeraj, we have not noticed any negative realization, so I do not understand what do you mean by that.
So if you look at our volume and value numbers which we report for the non-AgChem business, we have seen overall sales growth of 31%, and we talked about a volume growth of 59%. So there's a negative realization or negative price growth of 28%. Similarly was the case in last quarter and the quarter before.
No, we have not looked at it from this angle, and it has not drawn our attention in the past. So I'm not able to comment. I'm not able to make any comment instantly.
Okay, so can you give some perspective on the non-AgChem business, especially to US? How, on the post the tariff, what are we seeing in terms of the demand, and similarly in terms of the pricing there?
See, we had gone through one short period of time when the President of USA had increased the tariff rate to 125%. Over and above the existing tariffs. So people were not very much encouraged, they were in fact discouraged. Then suddenly he brought it down from 125 to about 30%, That excited the customers and they rushed to buy as much as they could, fearing that it may go up to again 100% or so. So that was a short period of time when people bought in a very good quantity.
Okay, and was there any element of pre-buy or given that there's still an uncertainty on tariff, what can play out for the rest of the year, was there any element of pre-buy in the non-AgChem business?
No, sir. Normally, if you understood our non-ag business, our non-ag business does not have much of a emphasis on the stock keeping and then using it. People buy as per the requirement, and it is just like a tailor-made business. Every customer has a specific requirement, specific sizes and different qualities. It's not very common. So we are supplying to them as per their requirement, and that requirement may not repeat, normally doesn't repeat with the next customer.
Okay. So second question is on the AgChem business, the gross margin region-wise which we gave. For Europe and NAFTA, we have seen a very sharp jump in gross margin, say from 36 to 43 for Europe and 26 as against 22 for NAFTA. What explains this jump in gross margin for us?
See, we have gone through a very difficult period in our business in the last 2 years. Particularly about 1.5 years back, when there was a lot of inventory in the channel and the prices had taken a very severe beating. That had also affected our gross margins substantially. Now the gross margins have got back to the normal, and what you are comparing is with the period which was abnormal.
Okay.
You understand?
So if I look at the rest of the year, what factors you are looking internally which gives you confidence that this margin will sustain?
Because there is a much more and very good stability in the business today. last 1.5 years, we had gone through a very adverse turmoil. That turmoil does not exist anymore.
Okay. Just one request and I'll come back to you. Any thoughts on surplus cash? Because I think we were around 550, 600 crores and in Q1 alone we are close to 800 crores. So any thoughts on how we want to use surplus cash? Because even with the capex of 450 crores, this cash level will just build up further. So any thoughts on how we want to use this surplus cash?
We want to run our business very comfortably and peacefully. So we are ready for any adverse situations and still be able to maintain our business.
Any thoughts on increasing payout, sir?
Yes, we have. We have declared 2 times dividend in this last quarter. So we will be more liberal in giving payout dividends or any such things, rewarding the shareholders who have stayed with us for so long.
Thank you again, thank you.
Thank you.
Thank you. The next question is from the line of Rajat Sethia from iThought PMS. Please proceed. I would request Rajat sir to please unmute yourself and then ask a question.
Hi, can you hear me now?
Yes.
Am I audible? Okay, thanks. Thanks for the opportunity, sir. Just wanted to check in the AgChem business, what has been the change in pricing situation in Q1?
The pricing situation has improved over the previous quarter, and it is the rate of increase is very slow, but it is very steady.
Okay. Sir, our sales grew by 25%, volume was 11%. So are we saying that 14% price is increased by 14%?
1 minute. Let me look at the figures.
Sure.
Sir, this has increased. This is the revenue increase I am talking about.
Okay.
Volume growth has contributed to about 13%, and foreign exchange impact has been another 13%. Price and product mix has been negative 1%.
Understood, sir.
Totally 25%, 25.4%.
Sure. And so similarly, non-agro volume growth is 59, but revenue is 31. So prices have not declined is what you have mentioned in the previous participant's answer. So is it because of the change in product mix that value growth is lower than volume growth?
No, I feel it is contributed more to the freight rates. The freight rates have increased substantially, and that has contributed to the increase in the revenue.
Okay. I heard that volumes have increased of 59% or so. Is that correct?
The increase of 59% is in the revenue, if I am correct. I am sorry. It is 59% in the volume. You are right.
Yeah, but sales is 31% increase. So the difference, does that not mean that prices have fallen? Or how will you help us understand this?
Sir, it is a product mix.
Product mix. So lower value products we have sold more in this quarter. Is that how it is?
Yes.
Understood. And sir, our gross margins, which you have said that they will probably maintain in rest of the year as well, around 35%. So what is the reason that our gross margins have increased so much? Given price increase is not much.
Mainly foreign exchange.
Sir, but foreign exchange is reflecting below gross margin, if I'm not wrong, in the P&L statement.
There's also increase in the volumes. See,
So
I
as we
will
understand, yeah.
as I have explained,
Yeah.
volume has contributed about 13%, and Forex
Yeah.
impact is also about 13%.
Sure. So, sir, I want to understand the gross margin, which is sales minus
Sorry to
cost of
interrupt,
goods sold.
Mr. Rajat. I
Yeah.
would request you to please go back in the queue
Actually,
as
ma'am,
there
this
are...
last question, I think it was not well understood, or maybe I couldn't explain well. So I'm still at the last question only, ma'am.
35%, why? What is the 35%
All right.
margin?
Yeah. Thank you so much. So, sir, I was saying, sales minus cost of goods sold is gross margin. So that number is 35%, which is the highest in the last many quarters. And you were saying it will sustain. So what led to this increase, sir?
We feel
Yeah.
it is
So what
sustainable.
led to this? Yeah, sir. So, what
I'm-
were the factors that drove this?
It is because of the stability in the business, no impact of excess inventories, and no adverse situation of people canceling their orders at the last moment or returning the cargo.
Understood. All right.
So it's a
Okay,
stability
sir. All
of the
right.
business.
Thank you so much. Sure. Thank you so much, sir. All the best.
Thank you. The next question is from the line of Rohit Nagraj from VNK Securities. Please proceed.
Yeah, thanks for the opportunity and congrats on good set of numbers, including the volume growth. So first question is, in terms of the margins for Q1. So our gross margins have improved. There is a benefit of Forex, but excluding the Forex, our EBITDA margins are closer to 50%. And you mentioned in your commentary that gross margins for the entire year will hover at similar levels. And our guidance is about 15 to 18%. So incrementally, will the EBITDA margins be more towards 15% or they will tend more towards 18%? Excluding the Forex part, which we have benefited substantially during Q1, and it may not recur in the subsequent quarters. So just your perspective on the same. Thank you.
Sir, I feel that the foreign exchange levels will remain at the same level, and our EBITDA margins will also continue in the range of 15 to 18%.
Sure. But if the pricing tend to improve from here on, is it possible that we will stick more towards, say, 18% than on the lower range?
Yes. We feel that the prices are on the way of improvement, though the progress is slow, but they are on the increase.
Right. And second question is, in terms of the freight cost, you mentioned that the freight costs have been higher. So during the last 1 month, I mean, post-quarter and towards the end of last quarter, how has been the trend? Is it still continuing to be higher and probably that will have its repercussions on the overall logistic cost for us?
It is on the trend of getting higher because of all these worldwide conflicts, particularly Iran, Israel, and this Red Sea disturbances. It is that's one uncertainty, and they are leading to the increase in the freights and also increase in the time of travel.
Right. That's all from my side. Thanks a lot and all the best.
Thank you. The next question is from the line of Himanshu Binani from Anand Rathi. Please proceed.
Sir, hi, and congratulations for an excellent set of numbers, sir. So,
Thank you, sir.
my first question is largely on the gross margin or the guidance side, basically. So, what we have been guiding in the last con call, we were guiding for somewhere around the 31% sort of like gross margins, while 15 to 18% sort of like EBITDA margins. Now, after the 1Q results, we have been like increased our gross margin guidance and expect the margins to sustain at this 35-36% sort of like number. However, we have been like maintaining our EBITDA margin guidance of 15-18%. So what is it that is like stopping us in terms of like increasing the EBITDA margin guidance also?
It may go towards 18 or little more than 18. I mean, there's no precise calculations for this. This is our gut feeling and impression.
Because, sir, the gross margin guidance have been like increased by almost from 300 to 400 basis points. However, we have been maintaining the EBITDA margin guidance in that range. So ideally, that should like typically flow to the EBITDA is what.
No, our EBITDA margin estimates earlier were on the lower side of 15%. Now it is on the higher side of 15%.
Got it, sir. And sir,
Yes,
the second question is largely on the agrochemical cycle side. So, as you alluded in your commentary as well as on the answers for the previous participants, that there has been like no sort of like pre-stocking. So, is it like more of a cycle which is turning positive now? So, from a destocking phase, are we like entering into the restocking phase?
No, it's no destocking or restocking. The people are buying as per their normal requirements with the normal level of inventories, if at all, which happens prior to the season in agrochemical business, and it gets reduced at the end of the season.
Right, because why I say you that is, we typically, Q4 happens to be the heaviest basically for us. However, we have like posted this sort of like numbers at the start of the year basically. So just wanted to have a sense in terms of like, is it like really the demand on ground or is it like more of a restocking basically?
I feel it is demand on the ground.
Got it, sir. Got it. That's all from my end, sir. Thank you.
Thank you. Thank you, sir.
Thank you. The next question is from the line of Riju from Antique Stock Broking. Please proceed.
Hi, sir. Thanks for the opportunity. Sir, if I look at your margin, so gross margin basically improved by 630 basis on a YOY basis, while the EBITDA margin only improved by 360 basis on a YOY basis. So there is a sharp jump in the other expense side. So if you could give some lights or give some thoughts on this thing, because we have seen a strong volume growth despite that we have a higher other expenses. So if you could give some light on that.
Sir, it is very difficult to answer this question. I am facing this question for the third time in this conference. I mean, offhand, I am not able to comment. We'll have to go into the detail and then make an answer. You can write to us.
Sure, sir. And a few bookkeeping questions. So if you could provide the registration breakup for the geography, like geography was registration breakup.
1 minute. Yes. We have 2,981 registrations as on 30th of June. European region is having 1,660 registrations. NAFTA region about 315. LATAM 760. And rest of the world about 248. Total 2,981.
Yeah. And so in terms of the volume that you have said, like the region-wise volume, so you have said the total volume was 11,657, correct? Total volume, yes, right? So you said like that is a 13% kind of a growth. But if I look at your last year number, the total volume was 10,861, which is roughly 7% kind of a volume growth. So if you could explain this math, like if I'm wrong in the last year volume data or this year, so if you could explain me this thing.
I have not understood the question. Can you
Yeah.
repeat
So
the question
this
once
year,
again?
yes, sir. So this year, our total agrochemical volume was 657 metric ton, right?
1 minute. This is 11,657 is the total,
Yeah, total volume.
including agro and non-agro.
Yeah. And sorry, last year this was roughly around 10,861. Is that correct?
Last year.
Yeah.
No, last year I have, but I have, this is for the quarter one.
Yeah. So quarter one. So last year Q1, this was 10,861.
Last year Q1, the table I have shows that the total agro and non-agro, the volume was 10,301,000. And this year it is 11,657,000. And there's a growth of 13.2%.
Okay, understood. If you could give me the breakup for the last year data, it will be very much helpful.
Breakup
Last
of?
year Q1 data. Last year Q1 volume data.
Yeah, Europe was 5,144,000. NAFTA was 4,126,000. LATAM was 623,000. The rest of the world 408,000. Total 10,301,000.
Sir, ROW, how much? The number, rest of the world?
Pardon, rest of the world 408,000.
Okay. Understood. Yeah. Okay. Got your point, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Rudraksh Raheja from iThought Financial Consulting. Please proceed.
Yeah, I think this may be a repeat of the last questions, but I still want to check. Historically, we have seen like gross margins in the range of 30 to 32% mostly, and this quarter it's 35%. So, any elaborations on that?
Any elaboration? See, this is mainly because of a good margin in European region.
Okay, so
and Europe is having also a good share of the total revenues, and the margins in European region was about 43%.
okay, and specifically, sir, in European region, did we see any price increases?
There has been some improvement in the prices, and it has been better than the previous quarter.
Okay, sir. Any ballpark percentage around that?
Pardon?
Any percentage that you can give us, quantify it?
Ballpark figure for what?
European price increases.
No, I don't have that figure. This is a general statement that I'm making.
Okay, understood, sir. Thank you.
Thank you. The next question is from the line of Archit Joshi from Nuvama. Please proceed.
Hi, good evening, team, and firstly, congrats on a solid set of numbers. Sir, my question was largely related to our capex. We have heard you say that the capex, or rather the registration costs, have gone up significantly, and yet we continue to have a very solid registration pipeline. Given that, the total number of registrations that we do we get economic benefits from all the registrations? I wanted to understand for how long these registrations that we do continue to contribute to our top line and profitability, and how many over a period of time become obsolete in terms of sales. Because given that we have 2,000 plus registrations, I was just curious to find out how much of this actually gets converted into economic benefits or rather sales.
See, Mr. Archit, the newer registrations that we get, they give us a better margins, and the registrations which have been old, there's more competition in those registrations and the margins get distributed. So, as and when the registration becomes older and older, the profit margins are going down, and the newer registrations are coming with better profit margins. This is a general statement I can make.
Understood. Sir, and over a period of time, since we have seen increase in cost of registration, do we continue to register these 1,000-odd products that we have in the pipeline, or have we become more selective with regards to having, let's say, a go-to-market strategy or something like that, which can be a very targeted play towards certain geographies with certain products? Have we experienced any sort of such strategic changes in our registration pipeline?
Not anything significant that I can make a reply to you. Very rarely, once we pick up a product for registrations, we pursue it till we get the registration, unless all of a sudden the product gets banned because of environmental reasons or other reasons,
Understood, sir. So one last thing.
Very rarely.
Sir, one last question from me. Generally, over the last few years, or maybe if you can speak about this year also, how would be the concentration of, let's say, the top 10, maybe 20 products to our top line? Will it be like more than 50%, less than 50%? Any ballpark number that you can provide?
Yes, I can. Just give me a few minutes. You see, top 10 molecules have contributed to 36% of the total revenue in the first quarter of 2026, and the top 10 molecules in last year in the same period was about 38%. Top 5 molecules have contributed to 21% this year and 23.5% last year. Top 3 molecules have contributed to 14% this year and 16% last year.
That's really elaborate, sir. Thanks a lot for all these answers, and wishing you all the best.
Thank you. I'm happy that my team was prepared for these kind of questions.
Thank you. The next question is from the line of Viraj from ISMPL. Please proceed.
Yeah, thanks for the opportunity. Just one follow-up question. You said that the reason for drop in realization of non-agrochemical business is product mix. But if you look at the margins in non-agrochemical business, they have been quite stable, around 21 to 23%. So just trying to understand, how does the two add up?
Can you repeat? I have not understood your question, sir. Can you repeat it once again?
So the answer to previous participant, one of the previous participants to non-agrochemical business, you said the realization drop was product mix being adverse. But if you look at our operating margin in non-agro...
1 minute, sir. You said realization drop. I haven't understood that. I don't think I have made any such statement.
So the non-agrochemical business, if you see, we have seen a realization drop, price degrowth for last couple of quarters, and the answer to that question to one of the participants, you said that product mix is adverse. But if I look at our margin in non-agrochemical business, they've been quite stable around 21 to 23%.
Mr. Viras, your question is not making much of a... I'm not able to understand the exact question. Please...
So exact question is, if I look at operating margin in non-agrochemical business, they have been very stable around 21 to 23% in non-agrochemical business. But if I look at the realization, they have been adverse. So while margins are stable, the realization is negative for us.
We will have to look into that. I'm not able to comment right now.
Okay, that's all. Thank you.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
I would like to thank everyone for joining us for this conference call. I hope we have been able to answer all your queries. We look forward to such interactions in future. We hope to meet your expectations in future too. In case you require any further details, you may contact us or Mr. Devan Dhruva of Strategic Growth Advisors, our Investor Relations Partner. Thank you once again.
Thank you. On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.